It's Tuesday, August 31st, 2021. I'm Ashley Pollard here for today's edition of Tuesday Talk, where we review common real estate and mortgage related terms. I'm sure you can hear the bugs outside because it's nighttime again. Nighttime is just when I've been having time to do these videos. So I'm sorry they're not coming early in the day, but the information is still valid. It's still true. Watch them when you have time. Watch them next week. Watch them over and over. Just keep watching them. And give me feedback, please. I love the feedback that you guys give. But it's late. Let me jump into today's term, which is qualifying ratio. What the heck is that? Qualifying ratio is the percentage of monthly income that a borrower can spend on their housing payment. There's a front-end ratio that we refer to, and there's a back-end ratio that we refer to. I'm going to break down both. And again, if you don't understand, if math's not your jam, just watch it again until it makes sense. So your front-end ratio is referring to the amount of your income that you can put toward your monthly housing expenses. And your monthly housing expenses are what we refer to as the PITI payment. I did a video on PITI, so if you don't remember, go back and watch it. If you never watched it in the first place, go back and watch it. If you are my client watching this for the first time, go back and watch it. Just go back and watch it. But your PITI payment is your principal, interest, taxes, and insurance. If you don't remember, that's a real quick summary for you. So your front-end ratio, your monthly housing expenses, or your principal, interest, taxes, and insurance cannot exceed 28% of your monthly gross income. Gross income, I hope you know, is the income before taxes, not after taxes. So again, your front-end ratio is what the bank's going to refer to when they're looking at your monthly housing payment. And your monthly housing payment cannot exceed 28% of your monthly gross income. That's your front-end ratio. Now, in certain situations with certain loan products, the ratio can be a little bit higher. FHA goes up to 31%, in some cases, even more. Again, talk to your loan officer about what you might qualify for if you have some extenuating circumstances. So let's move on to back-end ratio. Your back-end ratio is going to be not only your PITI payment, but it's going to take into account all your other debts, car, credit card, student loans, all that stuff. So this ratio is going to compare your monthly gross income to the PITI and all the other debts, and that all combined, your PITI plus other debts cannot exceed 36% of your monthly gross income. Front-end ratio, we can't go over 28% when it comes to our housing payment. Back-end ratio, we can't go over 36% when it comes to all of our monthly payments. Again, that's your PITI, that is your car payment, student loans, all of that. And one note about the PITI payment, you can also have some other things in there. If you're buying a condo or a townhome, you might have association fees. These are all things that the lender definitely is taking into account when they're doing your front and back end ratios. So I'm going to give you an actual real life example with numbers because honestly, it just makes it easier to understand. I'm going to use a nice even number of $121,000 as your salary for the year because that's easily divisible by 12. Divisible, not dividable. So if you make $120,000 per year, divide that by 12 months and you make $10,000 gross per month. So what are your front and back end ratios and do you qualify? Well, your front end ratio, your monthly housing expense cannot exceed 28% of your monthly gross income. Your monthly gross income is $10,000. So $10,000 times 28% means that your monthly housing expense cannot exceed $2,800. Your monthly housing expense is your principal, interest, taxes, insurance, association fees, private mortgage insurance, all those things that are wrapped up into your mortgage that cannot exceed $2,800 if you make $10,000 per month. Now let's go to the back end ratio. Your back end ratio, we're going to use the same salary of $120,000. Well, your back end ratio, again, is taking into account your principal, interest, taxes, insurance, credit cards, student loans, what else did I say? Car payments, all that. That's all going to be wrapped into your back end ratio number, and that can't exceed 36%. So if you make $10,000 a month times 36%, your monthly total debts cannot exceed $3,600. That's your monthly housing payment, which can't be more than $2,800, and then your monthly other debts all together cannot exceed $3,600. Let's say you max out at 28. You want a nice house. Your mortgage payment is $2,800. Well, that means you cannot have any debts that exceed $800 because $2,800 plus $800 is $3,600, and that's the cap. But like I said, there are exceptions, especially with FHA loans. On back-end ratio, FHA can go up to 43% or higher. Just depends on the situation. Now, I'm going to go over a couple of these situations, but I'm going to refer you to your lender for specifics and additional situations because I'm only giving you kind of what I know. I don't like to say too much about the finances because that's not my forte, but I will put you in contact with people who are really good at explaining that stuff for you. Now, if you have higher ratios, just note that the bank is going to understand that's a higher risk of default. You got a lot of debts. It's a high chance that you might not be able to pay your mortgage 1 month or your mortgage on time consistently. So they're going to consider that. But if your ratios are higher, these are some ways that you can still make the loan work if you have some of these extenuating circumstances. I'm going to give you like 3 examples. So let's say, let's see here. Let's say you can do a higher down payment. You have a substantial cash reserves, and you can come to the table with higher than a 3 or 5 or 10% down payment. Well, that means that the bank is going to have to loan you less money, and that might help you out in terms of the ratios. Your ratios might work out if they're higher because you're putting more money down. Another example is if you have a lot of savings, the bank will try to see, okay, well, do you have a history of saving a lot of money? Is this enough reserves that, you might be good in case times get hard? That's an extenuating circumstance. Another example is your previous credit history. If you show that you can pay your bills on time, that you've had a lot of bills that you've paid on time, then they will take that into consideration if your ratios are higher. And I'll give you a 4th example. If you only have a minimal increase in your housing expense, right? So if you're currently paying $2,500 in rent and then you want to buy a house where your mortgage payment is $2,700, that's not that big of a difference. So if your ratios are higher, there might be some ways that the bank can work with you so that you can still purchase that home. Now, again, there are lots of extenuating circumstances. I'm going to refer you to your lender. And if you don't have one, or if your lender is just not good at explaining these things or has never explained these things, you definitely want to call me so I can put you in touch with people who will get that information to you so you understand where you are. So go back over this video. If it was a lot for you, I know I said a lot of words and I kind of tend to talk fast. Go back over it if it doesn't make sense. Watch it over and over and over until you get it. And then call me so that I can send you to my lenders who can explain all this stuff for you, break it down for you. And then if you have any other questions about anything else, call me for that because I am your one-stop shop realtor. And I'm going to make sure you have everything you need because my goal is to educate you. And I want to make sure you understand what you're purchasing, you understand the investment you're making, and you understand that the journey that you're about to take. Because buying a home, it's a cute Instagram post, but then after that, it's real. So please reach out to me for any questions or concerns. I appreciate you for tuning in tonight. It's the last day of the month. Tomorrow's the 1st of the month, and my partner Kyrique is actually closing on a 2-family home tomorrow. So that's pretty exciting. I hope you guys all enjoy the rest of your week. I'm going to enjoy the rest of my week, and I will see you next Tuesday. Have a good night.